Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This we get everything you need to know in 90 seconds at 9 o'clock with news of mixed expectation of flatter demand that's hurting commodity prices. And that includes some key food prices, which was also impacted by healthy supply levels. But first, over the weekend, the data showed that the US economy created far fewer jobs in August than expected, adding 142,000 in August and below market expectations of 160,000. July's increase was revised sharply lower too, but their jobless rate edged lower to 4.2% in August from 4.3% in July. We do need to note though that the 142,000 rise is the seasonally adjusted number. The actual number is 263,000 from July, which is pretty healthy. From a year ago, payrolls are 2.3 million larger. The economic impact of 2.3 million more people employed is not insignificant, and that is after the big March revision. The US job market is cooling but not cracking. This fact will give the US Fed more room to manoeuvre at their meeting on September the 19th in 10 days' time. In China, the end is nigh for struggling developer China Vanke. They reported terrible July metrics, and their liquidity situation worsened notably. Not helping them, China's regional banks are moving faster to quit non-performing real estate loans. That is leaving the majors holding the bag as the government urges them to lend more to support the weak housing market. It is hard to see how the management of their real estate crisis won't end very badly. China's neighbours are increasingly concerned. In Australia, home loan activity for owner-occupiers picked up in July, adding almost $19 billion in the month, the most in 2 years. For investors, the rise was almost $12 billion, which was an even faster rate of increase and the most since January 2022. And prices for iron ore, nickel, cobalt and lithium, however, are all falling and all at or near their 5-year lows. And world food prices also dipped in July with declines in cereal and meat prices in the month. Dairy prices actually rose. Overall prices remain their lowest in 3 years. Good agricultural conditions have persisted for some time now, boosting output. And the US Treasury 10-year yield is now just on 3.72% and unchanged from Saturday. And the price of gold will start today up $4 from Saturday at $2,497 an ounce. And oil prices are 50 US cents lower at $67.50 a barrel in the US, while the international Brent price is now just on $71 a barrel. Both are down $6 in a week, or down 7.5%. And the Kiwi dollar starts today at 61.7 US cents and unchanged from Saturday. That's 0.75% lower in a week though. Against the Aussie, we're 10 basis points firmer at 92.6 Australian cents. Against the euro, we're also unchanged at 55.7 euro cents. That all means our trade-weighted index starts today at 69.7 and unchanged from Saturday, but down 75 basis points in a week. You can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.